Hi, this is Anisha BilalaCoca and company for my analysis is the Coca-Cola company. Coke sells over 500 brands of products over 200 countries. They presently provide more than 1.6 billion drinks a day worldwide. Now, these are some charts showing figures for revenues of the companies and earnings per share growth. The chart shows that Coke has been increasing from the last 10 years. Now, there's this graph which shows Coca-Cola company's dividends per share and annual dividend growth rate. Coca-Cola usually raises its dividend in February every year. As dividends per share would be raised, this scenario would imply that stock value will increase. Now, if you were to ask to choose between companies that offer 15% dividend growth and other offering 30%, you would obviously go for the second one as it implies greater profits to you. The graph here shows that dividends per share are increasing consistently over the year. That is, it was 0.4 in 2002, 0.45 in 2003, 0.5 in 2004, and so on, and 1 in 2012. Dividend growth rate follows the zigzag pattern. That is, it is increasing from 2003 to 2004, decreasing till 2007, increasing in 2008, again decreasing till 2011, and is increasing now. Now, the valuation done for the Coca-Cola company shows that the intrinsic value per share is 52.104. This is the FCFE valuation, that is free cash flow to equity. The cash flows are discounted to get the final present value of the future FCFE. The intrinsic value is greater than the current market price, that is 40.08. Since the intrinsic value is greater than the current market price, it is a buy. Now, why it is a buy? It is obvious as through all the ups and downs of the stock market over past decades, Coke has remained a solid investment for everyone who owes it. Coca-Cola company gives investors very high return on equity, meaning that for money you invest, your return is typically higher than industry average. Also, the company has increased stock dividend every year for almost 50 years straight. Now, what is the strategy that Coca-Cola is opting now? It is currently spending more money in newest form of advertising, social networking, etc. This has cut their advertising cost while boosting product awareness. Coca-Cola is basically a stable consumer staple company. It has a strong brand name and makes for a good defensive stock. The company's trailing net income payout ratio of 50.5% as of September 2012 is fairly consistent with the 10-year historical average of 51.7%. In terms of free cash flow payout, KO's annual dividend payment historically only represented slightly more than half of the annual free cash flow, indicating that there's an ample slack for further dividend hikes down the road. And obviously, as the dividends will increase, the prices of the shares will definitely increase. Now, in the light of KO's favorable valuations and fairly predictable dividend growth potential, the stock has a tempting risk-reward profile. So, I recommend buying the shares now.